Lastly, and the last company we'll talk about is Bravura Solutions. So this is really a classic turnaround case. So we bought this in March, April last year. The stock was 30 cents. It had 100 mil market cap, 80 mil net cash, and it was a $250 million revenue software business. At the time, it had a horrible board and management. It was burning cash. It was loss-making. It was a bit of a basket case. Again, new board and management came along, took complete control of the company, bought 30% of the business, got rid of everyone, installed a really good management teams that understand software. Andrew Russell that ran Class Limited, which we used to own and got taken over eventually by Hub. They simplified the business. They took out $65 million of cost in 6 months, returned to profitability, and they're basically targeting 15 to 20% cash EBIT margins in FY25. So they've gone from loss-making to making 30 mil of cash EBIT this year. And they've got 150 mil of net cash on the balance sheet now, so it's 25% of the market cap. And the board, which is basically a bunch of guys that used to work and run Constellation Software, which is probably the greatest software acquiring company in the world, listed on the Canadian Stock Exchange. They believe that this business should be making 25 to 30% cash EBIT margins, and we think that they could potentially deliver that in the next 12, 18 months, which will be significantly higher than what the market expects. At the same time, they've got quite a lot of capital management initiatives. So they're going to return capital next year. So that will be in Feb, $75 million. They've got a $20 million buyback in place, and they're going to resume dividends probably in February, March results. So that's really good. The valuation is about 10 times EBITDA. Some of their peers are on 14 times. Now, what's interesting is that if they can win a large new logo contract win, which could add anywhere between 20 to $30 million, then I think then this stock will suddenly get a growth multiple, something like Gentrack has. And in the meantime, that sort of margin improvement and capital management, I think will continue to provide support to the stock. And obviously, there could potentially be some M&A. So this is a business that we've made about 5 times our money so far, but we still think there's some really good upside.